Alright, welcome again. So, this is our second video about ETFs and a continuation for those of you who want to learn more about ETFs and investing in ETFs. My name is Joona Heinolan, I'm from OP Markets, and today again we have our special guest Lina Turi from Xtrackers. In the first series we learned that ETFs in many ways are similar to index funds in the sense that they are cost-efficient investment solutions that provide access to diversified set of securities in one fund, but that the shares of an ETF trade like stocks on the stock exchange. And this all is great, Lina. So, can you tell us how investors are using ETFs as like kind of part of their investment portfolio?
Yes, of course, Joona, and thank you for having me back. So ETFs are used by investors for many purposes and in many different types of strategies, thanks to their almost perfect replication of the underlying index value. They are used by both professional and institutional investors and also in ETF savings plans and for long-term investments by private investors such as yourself and
retail
me.
Customers. Yeah.
Exactly. Investing in ETF can serve as a good cost-efficient base for your portfolio. Think about a global equity exposure or a broad exposure to global bonds. But ETFs are also available for more granular exposure, and that means that your cost-efficient base can be complemented with more satellite exposures. It can be a region like emerging market or exposure to Chinese equities. There are also ETFs for more tactical exposure. If you want to express your current market view, then you could maybe invest into value stocks or to more growth-orientated stocks. At Xtrackers, we have more than 280 ETF share classes covering all asset classes, really, and that means that there is something there for all kinds of investors. So whether you are a short-term investor or a long-term investor, whether you're looking for a global exposure or a more niche exposure, ETFs provide a liquid and a cost-efficient investment solution for your portfolio, and you can use them to match your own risk profile.
So how about if you just buy one big ETF, like MSCI World ETF that covers like the stock market of the world? Is that enough in one portfolio?
So ETFs on the MSCI World Index, they invest in over 1,600 stocks in 23 developed market countries. So an MSCI World ETF might be suitable as your base into your investment portfolio. And with the 1,600 stocks, yes, you will have a diversified equity portfolio.
Yeah.
It's not a coincidence that MSCI World ETFs is one of the most common in ETF savings plans. But example, emerging market could be a nice complement to your global equity portfolio, because then you would get exposure to countries such as China, South Korea and Brazil. So complementing your MSCI ETF with an MSCI emerging market ETF could be a good way to build a balanced equity portfolio. Then if you want to add some more specific tilts towards a sector, such as healthcare maybe, then you can consider a sector ETF. Clearly, you would have a higher concentration to healthcare stocks in your portfolio, and that would consequently come with the opportunities and risks.
Lina, but how do I then choose the right ETF? There are so many options.
So like with any investment, really, you have to understand your investment goals. So therefore, before you choose your ETF that you want to invest in, you have to have a clear understanding of your investment's objectives, such as whether you're looking for income or growth of your portfolio. Then you can move on to choose a specific market or sector that you want to invest in. Consider diversification, because that is obviously clear with any investment to manage risk of your portfolio. So for example, if you're looking for a diversified ETF, an indicator can be the underlying countries or sectors, or for that matter, the number of underlying stocks, because the number of underlying stocks, clearly, the higher, the more they are, the more diversified the portfolio will be.
Yeah.
If I should give you an example in this context, a popular index is Euro Stoxx 50. Those are the largest European stocks and the ones with the highest liquidity.
Yeah.
But that index only contains 50 stocks from one region. This can be compared to the MSCI All Countries World Index, which would have 2,900 stocks. So obviously a much more diversified equity portfolio. So reviewing the underlying assets and holdings of the ETF will get you to understand the ETF's risk and return profile. You can also review the ETF's past performance to see if it has a consistent track record to the underlying index. Even though that past performance is not a prediction for future return, by looking at the performance of the ETF, you can get an understanding of how it will behave under certain market conditions. Last but not least, look at the expense ratio, because ETFs comes at various costs, like any fund really. Compare the costs for different ETFs with similar exposure, and then you will find the most cost-efficient solution.
Thank you, Lina. They were great hints, by the way. You should take a word about them. But how about ETFs under management and trading volume? Are those factors important to look at? I'm thinking like, does low trading volume and low assets under management mean low liquidity?
That is a very good question, Joona, and as a matter of fact, it's one of the myths about ETFs. Liquidity for ETFs refers to how easily you can trade it and at what costs. As ETFs units can be created and redeemed at any time, what you see on screen is not always the reality. It is the liquidity of the underlying market that matters the most. In that sense, the bid and offer spread is a more appropriate way to indicate the liquidity of an ETF.
Yeah.
ETFs that covers the popular indices such as S&P 500, they tend to have a very tight bid and offer spread. To be precise, the liquidity of the underlying securities is known as the primary market liquidity, and the ETF's average daily traded volume is known as the secondary market liquidity. Now we go into the details. The primary market acts as a backup and provides liquidity to the ETF, and at worst, the liquidity of the ETF will be that of the underlying market. There is a whole ecosystem behind ETFs to ensure that they have the satisfying liquidity and that they continue to be a liquid investment solution.
Okay, thank you, Lina. Great insights from Xtrackers. This is very good learning about ETFs, and maybe it's time to summarize again what we've learned. ETFs can be used for many purposes when constructing an investment portfolio. for long-term savings and to express more tactical investment ideas. As a base in the portfolio, or to get exposure to a specific part of the market, like a region, country, or a specific sector. Like with any investment, before investing in one, should consider its own individual purposes and goals and evaluate the risks and opportunities with the ETFs in scope. Finally, comparing the costs, that's important. There are management fees and trading costs. On those ETFs that provides similar exposure is an important ratio when evaluating which ETFs to choose. Yeah, so if you have any questions out there regarding ETFs or how to invest in ETFs, you can always take contact to our local representatives at OP, and we are happy to help you. Once again, thank you, Lina. It's great to have you here.
Thank you, Joona.